As far as a formula for calculated premiums in New Jersey or really any other state, I'm not a huge fan of having a formula that just kind of fits everybody, because there's some people that are a little bit more risk tolerant or risk adverse than other people. Some have more money and that kind of stuff. When you look at it from a large institutional investor, a formula that most institutional investors use does make sense, right? Because you're playing the law of average. You have people that are investing tens of millions of dollars into tax liens, and when everything averages out, it makes them happy, right? Everything's good. But as far as on an individualized perspective, what I suggest is that you come up with your own formula. Like, your formula is probably different than mine, different than another investor, that kind of stuff. And the best way that you can do this is do a little bit of research. Call the county and see if they have any stats when it comes to the tax liens. See how long it takes most tax liens to get redeemed in that county. Maybe they'll say 1.8 years or 2 years or whatever it is. Then that kind of gives you a starting number for your calculations. You can have a fake lien and say $1,000 lien with this premium redeemed here, and I need to make this return on my money, and that'll kind of help you build your own formula. Obviously, in New Jersey, I think just about every lien now goes down from 18% to 0, and of course it goes back up for the premium side, so you can get that 18% the next year. So, calculate all the different numbers, and it's going to take a little bit of effort, a little bit of work, of course, just to figure out what works best for you. But again, I don't have a formula that kind of fits everybody, and hopefully hopefully that's not the answer you're looking for. But my suggestion again is to create your own formula. I've got some people that are very, very risky in what they do. They might bid crazy amounts for premium, hoping that they're able to foreclose a tax lien in the future, that kind of stuff. Me personally, whether I've got to foreclose it, that's got to be factored in. I factor in if it's a tax deed, I've got to factor in any suit and quiet title costs, anything like that. Some people don't worry about that. Some people just, say, hey, I'm going to put all my cards in one basket and see what turns out. I'm a more conservative investor. I used to be very, very risky when I was younger, but as I get older, I get more conservative. So again, obviously that might play in it as well for you. So figure out that formula based on the tax lien redemption period in that area, and hopefully the county is able to give it to you. If they don't, do a little searching, online, go through some different forums, talk to some different investors, and see what they're experiencing, and then that'll give you at least a starting point that you can continually adjust. And that way, that'll, at the end of the day, you'll have that formula that you're looking for. So, Jack, hopefully this helps you out.